Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Today's May 15th, 2025. And we just got the Producer Price Index, or the PPI. It measures inflation further upstream, not to be confused with the Consumer Price Index. This is what the factory pays for the stuff that they make and then they sell. It also includes labor costs, service costs, all kinds of things. And look, PPI, it came in lower than expected. It came in shockingly lower than expected by some measures. Now, the year-over-year numbers weren't that different. They had 2.4% year-over-year for the headline number versus 2.5 expected. That's not that big a deal, but it was down substantially from 3.4% last month. Almost a full percent drop in producer price inflation. Now, I would also add that 3.4% drop or increase from last month or from March, that was a big upward revision. So we've got a big miss on the April data and big upward revisions to the March data. And I've been reading around on Twitter. I've been trying to get my head around what this data is really telling us. And look, I haven't had that much time to digest this and to really scrutinize it. So we're kind of just doing a hot take here, but the market's not really reacting to this. And you'd think the market would react positively to inflation data lower than expected. That's not happening. I think because the market is kind of having the same reaction I'm having. Whoa, that drop was too much too fast. There's something going on under the hood here. Maybe this is no reason to celebrate. That's kind of what I'm getting from this. Now, I mentioned the year-over-year numbers. They weren't too much lower than expected, but there was a big drop from last month. But it's those month-over-month numbers. That's what was really shocking to me. I mean, just shockingly low. The headline month-over-month number, negative 0.5% in a month. That is a huge move to the downside. The market was expecting positive 0.2%. And of course, that's down from flat last month. Prices for producers went down sharply in the month of April. On the core inflation measure, they went down by negative 0.4%. The market was expecting positive 0.3%. So we've got a 0.7% delta in the monthly inflation numbers versus, expectations versus what we got. This isn't good news. The last time we saw anything like this, I don't know, like April, May of 2020, which wasn't really a good time, you may recall. So look, I'm speechless. This was very low. This was not expected. Obviously, tariffs and the trade war playing some kind of role here. All right. If we really want to try to explain what we're seeing, big upward revisions to March data, possibly we could explain that by producers pulling forward their orders, buying things ahead of the tariffs, driving prices up in March. And then in April, everybody was like, oh my God, on Liberation Day, shut down the assembly line, cancel the orders, don't order any parts or stuff. And of course, a lack of demand sends prices lower. Maybe that's what happened. It's possible that this was just the market, having that bullwhip effect from the shock of Liberation Day and the front running going automatically over. And so maybe we're going to swing right back to a big positive number next month now that we've kind of been like, oh, never mind that whole Liberation Day, 90-day pause, all that other stuff. I don't know. But I do think the market is right to be cautious here. I think this data is a warning sign, if anything else. Also going on this morning, United Health. This is the second time this week we've been talking a lot about United Health. The Wall Street Journal issued a report yesterday confirming my suspicions that the company is now under a criminal probe for Medicare fraud. Well, that's fun. Remember, was it 2 days ago we were talking about how the CEO abruptly quits for personal reasons? Well, sometimes those personal reasons include the CEO is being investigated for criminal fraud. That sounds personal. That's deeply personal, right? Just personal reasons. CEO might be going to jail. Nothing to do with the company, though, right? So, look, that's why companies sell off when CEOs abruptly quit without explanation. Look, United Health has a lot of problems, guys. We had the CEO abruptly quit. The criminal probe announced now. They pulled their guidance. A big earnings miss back in April. They've got various antitrust probes and civil investigations are ongoing. And the whole, CEO of the insurance division getting shot in the back and on the street. Yeah, that whole thing happening. Look, guys, I can tell you this company is very quickly turning into a rallying cry for politicians, media, and everybody shining a light on the inherent fraud, grift, theft, and just outright degeneracy that is at play in the healthcare sector right now. United Health is a big example of this. I might lump in companies like Steward Healthcare and Medical Properties Trust while we're at it. Something's got to change in the way we handle doctors in this country. It's not the nurse's fault. It's not the doctor's fault, and it sure as heck ain't the patient's fault. So, look, who else needs to be involved besides doctors, nurses, and patients? Maybe we just get the freaking insurance guys the hell out of the equation. You guys let us know what it's going to cost to go to the doctor, and we'll just pay you. I just throw it out there. You guys do what you want with them. But next time you're looking at a stock chart of United Health, do yourself a favor and zoom way TF out to like the 1990s. And then wonder, where's all the money in healthcare really going to? On top of that, we got a lot of earnings data today. We got Walmart came out. Their earnings beat, but the company is warning that prices are going to start rising starting next month due to tariffs. Even these kinder, gentler tariffs. Remember the 30% tariffs that everybody viewed as good news? Walmart's saying we can't just eat that. Prices are going up, which means if the 145% ever comes back, well, it's going to be even worse. We've got another head scratcher today. This is more confusing even than the PPI data. Dick's Sporting Goods is buying Foot Locker, and they're buying Foot Locker for an 86% premium over yesterday's stock closing price. Your guess is as good as mine. Why the hell would Dick's be buying Foot Locker right now? It's a mall stock. It's a dying company. There must be some missing ingredient here. I don't know. Maybe like there's a Foot Locker that's built on top of like an ancient Mayan burial ground, and there's really like 1 million tons of gold buried just underneath the store. And if they buy Foot Locker now, they can dig up that gold and woo, make lots of money. That's the only thing I can think of, because I don't know why anybody would pay almost double for Foot Locker. It's a dying name. But that's going on. Foot Locker stock is up big this morning on that one. We got a lot of developments in the trade war here. $142 billion arms package for Saudi Arabia. We've got $96 billion worth of Boeing jets are being bought by Qatar, plus $38 billion in military equipment to be named later. We've got European defense stocks are just ripping higher. Germany has signed off on a 5% of GDP target for defense spending. Let's just take a minute to take stock of that and what a profound turnaround that is for Europe. Remember during Mr. Orange's first term when everybody was like, oh my God, he's so crazy. He's talking bad things to our allies. And Germany was only spending 1.4% of their GDP on defense spending, even though they agreed to 2%. And this mean bully is so rotten for insisting that Germany spend their 2%. And the whole world is like, well, we don't need to spend so much on defense. It's just those warmongering Americans. And now here we are a few years later, and Germany's like, you know what? Let's make it a cool 5 because we're terrified of Russian tanks rolling across European plains. It's amazing how much things have changed in the last couple of years. European defense stocks ripping, obviously, on that news. Guys, there's a lot happening in the world today. I hope we got time to get to all of it. Let's shrink my big melon of a head and see what is going on in the world. And this is when I say, please, pretty please, with a big cherry on top, hit that like button and that subscribe button for the YouTube algorithm. And come on back tomorrow because we do this every single day. Right now, we've got the S&P 500 is down by about 20 points. Now, look, we initially had a little bit of a green candle here. This was algorithms buying on that lower than expected PPI. And then people were like, oh, quick, change the parameters. This isn't good news. And of course, the stock sold right back off. Still here in negative territory, only by about 1/3%. Not really deeply negative. Again, I think once the market has more of a chance to digest this PPI news, they're going to realize this isn't really a good story. The Dow, meanwhile, is down 162 points. United Health is contributing to that decline once again this morning, 0.4% lower for the Dow. And the NASDAQ is off by 0.44%, or about 93 points to the downside. So we got stocks are down pretty much across the board this morning. Looking over at the U.S. dollar, we're seeing a weaker dollar here, sharply weaker this morning, 44 basis points to the downside. Still over 100, though, 100.63 for the DXY. And looking over at the bond market, and I have not set up my bond market chart. I am remiss this morning. We got to scroll through the stands, through Europe. There's the UK. Their rates are higher again. All right, we've got lower interest rates in the United States here. All right, that's interesting. 30-year Treasury down by 1 basis point, 4.955. The 10-year's at 4.480. That's lower by about almost 5 basis points. The 2-year yield is at 3.984. That's down by about 7 basis points. And the 1 month is at 4.317, off by a fraction of a point. So we're seeing yields heading lower. That's people buying bonds. Are we seeing a little bit of maybe of a safety trade here this morning? I don't know. Let's look at gold to see if they can confirm it. And we've got gold is modestly higher this morning, up by about $18, 0.6% higher for spot gold at $3,195. Watch that 3,200 level for gold. Interestingly enough, gold hit a pretty low level overnight. 3,120 we went down to, and then it reversed in the middle of the night, and it's been moving higher ever since. Possibly gold putting in a short-term bottom here, getting ready to move higher. Spot silver, meanwhile, sitting out the rally, $32.17 for spot silver. That's off by a nickel or about 0.18%, but I like the shiny. Copper, meanwhile, is down by about 0.3%. We've got platinum is higher by 0.9%. Palladium is up by almost 2%. And WTI crude is down by $1.50 this morning, 2.4% lower at $61.61. So look, we've got silver down, copper down, crude oil down, while gold is up. The world is not really excited about the state of the economy this morning. That's what commodities are telling me. Now, looking over at Bitcoin, we're off by about $770 here, $102,778 for Bitcoin. We're still kind of consolidating here between 100 and 104. Bitcoin looking for confirmation one way or another, depending where it wants to break. Now, I just wanted to throw this one out here, guys. Check out this story from Coinbase. According to Coinbase, criminals targeted our customer support agents overseas. Coinbase is saying no passwords, no private keys, or no funds were exposed, and Coinbase Prime accounts are untouched. I don't know why they're saying Coinbase Prime accounts are untouched. Does that mean other Coinbase accounts are touched? Maybe a little more clarity needed there. Coinbase Global Inc. says they will not pay the $20 million ransom demand that they received. So a little bit of rough news there in Coinbase this morning. Their stock was down a little bit on this news, but it looks like it's not causing any movement in Bitcoin's price for the moment. All right, let's talk about this PPI data, guys, because this data is all over the place. Look at that 2.4% number. Big decline. This is the year-over-year headline number, 2.4%. Still above that 2% target for the Fed, but down sharply from 3.4%. A big decline. Now, I just want to scroll down here a little bit, and you can see the upward revisions because this data was initially reported in March as 2.7%, and now you can see the previous number showing as 3.4%. So we had a big upward revision to the March data and then a big decline in the April data. The only thing I can think of is that this is the market just trying to come to terms with all of this tariff hysteria. But it was the monthly number again. That's really what's shocking here. And this chart kind of does it justice here. Look at this, negative 0.5%, down from nothing last month. A big monthly decline in the headline PPI inflation here. I haven't seen that in a while. When's the last time we saw a number like this? Yeah, this is the lowest since, so we got to go back more than 3 years. We got to go back 5 years. We got to go all the way back to April of 2020. To get a lower monthly number than this. And guys, remember, April of 2020, every factory in the country was shut down over the vid. So this is kind of a breakdown here. Again, I don't see this as a, yay, inflation is going lower thing. I don't really think that's what's happening. Although, look, that's some relief. Maybe this results in some lower consumer prices, but then you're like, oh yeah, tariffs. No, it's not going to result in consumer prices. So this is just margins getting crushed, I guess. Again, I need more time to digest this data to see what it's really telling us here. But that monthly number, that's scary. And that is a very rapid decline there. Now, on a core inflation number, let's look at this one. Here's the year-over-year core inflation. Again, a big decline, 3.1% year-over-year. This is when you strip out food and energy, down from 4% last month. Almost a full percent decline in producer price inflation. And that was almost entirely due to food prices going lower. Now, I got to send a shout out to Craig Fuller from FreightWaves, who came on the channel about 2 weeks ago now. We did an interview, and the one thing he said is, rest assured, food prices are not going to be going higher because of this trade war. And so far, the PPI data supports that, because it was food that was largely responsible for that decline in the core PPI data. And also, I just want to point out, guys, we're showing here the previous number for April at 4%. That was initially reported as 3.3% last month. So again, another big upward revision to that year-over-year number for core. And on a monthly basis for core inflation, same thing, a big negative number, negative 0.4%, down sharply from positive 0.4% last month. A big change here. If we go to the 5-year chart, guys, even the 5-year chart doesn't do it justice, because that's a bigger negative number at negative 0.4%. That's even lower than the April of 2020 number. We got to go back 10 years. That is a 10-year low for monthly core PPI. Not a good sign. All right. Again, yeah, a little bit of encouragement. Yes, inflation going down, but it's not going to translate to what the consumer's paying. Walmart is confirming that this morning. This is a sign of economic turmoil, in my opinion. All right, now let's talk about this one, another big one. United Health Group is under criminal investigation for possible Medicare fraud. The company stock has declined over financial performance and the sudden replacement of the CEO. Yeah, remember those personal reasons that the CEO resigned for. He wants to spend time with family before he goes to jail. Sorry, something in my throat there. The Justice Department is investigating United Health Group for possible criminal Medicare fraud. People familiar with the matter said the healthcare fraud unit of the Justice Department's criminal division is overseeing the investigation, the people said, and it has been an active probe since at least last summer. Now, look, if you guys were following my other channel, Doomers News Network, we were talking about this last summer. I did a whole segment on that Wall Street Journal article that came out, I think it was in August, about the stories about how these insurance companies were calling people out of the blue and bribing them with gift cards in order to send a nurse practitioner to their house, check their blood pressure, check their eyes, whatever. And then all of a sudden, mysteriously, all these new diagnoses were springing up out of nowhere. And these diagnoses just happen to be things that trigger higher payouts from Medicare Advantage. And it was really just a way to rip off tens of billions of dollars from the taxpayers. And now it turns out right around the time Wall Street Journal reported that story, the DOJ started this criminal probe. While the exact nature of the potential criminal allegations against United Health is unclear, the people said the federal investigation is focusing on the company's Medicare Advantage business practices. United Health said in a statement that it hadn't been notified by the Justice Department of the criminal investigation. The statement said the company stands by the integrity of our Medicare Advantage program. They said that mostly because they have to. A DOJ spokesperson declined to comment. The criminal probe adds to a list of government inquiries into the company, including investigations of potential antitrust violations and civil investigations of its Medicare billing practices, including at its doctor's offices that the Wall Street Journal first reported in February. What a mess at this company. And just take a look at the stock. These are daily candles. Starting right here on April 16th, they reported their earnings. The next day, wham, big surprise miss. Why? I don't know. Maybe when you find out you're under criminal investigation and you might be going to jail, you suddenly stop committing your fraud and then poof, you have less earnings to report. It's almost like United Health has trouble turning a profit without committing wholesale fraud. That's interesting. Then, of course, we had 2 days ago, the CEO abruptly resigns for personal reasons. Stock takes another big hit. It closed at 308 yesterday. It's down another 9.5% ahead of the opening bell this morning, $278.55. This one's going to be a big drag on the Dow once again. Again, guys, this company will be a rallying cry. You're going to be hearing congressional hearings about this. I don't know if any good is going to come out of it. I won't be holding my breath on that. But United Health, let's just set this to say monthly candles here, right? Monthly candles, and let's zoom way out. Gee, if only we could figure out where all the money in the healthcare system was going. Does anybody have any idea, looking at this chart, where the money in the healthcare system might be going? Because it sure as heck isn't going to the doctors. Yeah, I think I figured out what your problem is. And maybe the fact that this stock is falling off a cliff, just maybe that's a glimmer of hope that we might fix this mess. Call me a hopeless romantic, but I hold out hope that maybe we could fix this mess. Gee, it's a good thing they made healthcare affordable. Gag me. All right. Check out Walmart this morning. Walmart warns of higher prices and withholds second quarter profit guidance. Another company withholding their guidance due to the uncertainty of tariffs. Walmart will have to start raising prices later this month due to the high cost of tariffs, executives said on Thursday, even as the retailing giant's U.S. comparable sales surpassed expectations in the first quarter. Shares of the company rose 3.5% in pre-market trading. Its stock is up more than 60% over the past year. Walmart became the latest to avoid giving second quarter profit guidance on Thursday due to the uncertainty around Donald Trump's tariffs that have roiled world trade. Also, as part of this quarterly report, same-store sales in the first quarter grew by 4.5%, driven by increases in both transactions and unit volumes, the company said. Transactions rose 1.6%, while the average spend at the till rose 2.8%, with shoppers reaching for more dairy and pantry products, more people buying food at Walmart. What stage? Fresh fruit and personal care items also increased. So look, Walmart's saying we're going to pull our second quarter guidance. They reported a pretty good quarter. Even with these lower tariffs, they're still going to have to do it. This is one of the reasons why this lower PPI is not really good news, because it's not going to translate into lower consumer prices. Walmart stock is actually now down. It was up a little bit this morning, currently down 1.4% ahead of the opening bell, trading at $95.47. Also, a real head scratcher this morning. I just don't get this story. Dick's Sporting Goods to buy Foot Locker for $2.4 billion. Maybe this is like the diamond in the rough and there's some real value in there, or maybe this is going to go down in history as one of the biggest corporate blunders ever. But I just don't get it. Dick's Sporting Goods reached a $2.4 billion deal to acquire Foot Locker, combining two retailers saddled by President Trump's tariff wars. There's your orange goggles. Dick's will pay $24 a share for Foot Locker, reflecting a premium of 86.5% on the closing share price of Wednesday. They are overpaying for a dying company. Big time here. Look, shareholders in Foot Locker can elect to receive Dick's shares instead of cash. The transaction implies an equity value of $2.4 billion and an enterprise value of $2.5 billion, the two companies said in a statement. Yeah, you got me, guys. Foot Locker stock up 84% ahead of the opening bell here, trading at $23.68 after closing at $12.87. Good luck with that deal. Again, if you guys have any idea why Dick's would be buying Foot Locker, let me know in the comments. Is there something I'm missing here? Because I'm clearly missing something. Somebody sees a thing there. All right, let's talk about some trade deals going on. You know, those trade deals that were never going to happen? Well, they keep happening. U.S. agrees to sell Saudi Arabia a $142 billion arms package. I'm going to keep this one short, guys. $142 billion arms package. We had seen rumors that a $100 billion arms package was in the makings. We reported on that a couple of weeks ago. It looks like it was even bigger than initially anticipated. This story actually first came out 2 days ago. It's now $142 billion, but the big question mark is what kind of arms? We know they're getting cargo planes. We know they're getting missiles. Are they getting the F-35? That is a big question. Right now, the only country in the Middle East that gets the F-35 is Israel. And I think Israel would like to keep it that way. The F-35 is obviously a big advantage. If we start selling F-35s to Saudi Arabia, that could potentially complicate relations with Israel. So there's no clarity right now. We don't know if the F-35 is included in this package, but that's something to watch out for. That could potentially complicate the already incredibly complicated nature of Mideast relations. And we've got another deal going on here. More recently, U.S. and Qatar signed defense and aviation deal as Trump doubles down on luxury aircraft gift. The world just loves to talk about that plane. The president announced a record-breaking deal to sell Qatar up to 210 jets and $38 billion in future defense investments. Donald Trump announced on Wednesday that Boeing had secured a $96 billion deal to sell Qatar up to 210 Boeing jets, an agreement that comes as the president portrays the Gulf states' controversial offer of a gift to him of a $400 million luxury aircraft as an opportunity too valuable to refuse. The Qatar Airways purchase of Boeing jets, the largest order of wide-body planes in the company's history, has formed the centerpiece of economic agreements valued at more than $243 billion signed during Trump's visit to Doha. The White House claims the aviation agreement alone will support 154,000 American jobs annually, though it was unclear how those figures were calculated. Trump also secured a statement of intent for more than $38 billion in future defense investments from Qatar, further intertwining America's economic and security relationships with the Gulf state, now offering him a luxury aircraft. So planes and weapons for Qatar, a very nice plane from Qatar for the Donald. More weapons and more planes heading to the Middle East. Speaking of weapons, it seems like the world is just arming up here. European defense stocks are flying again as Germany backs 5% NATO spending target. And again, we'll keep this one short here. European defense stocks were rallying Thursday as Germany's foreign minister said the country accepted the 5% of GDP defense spending target for NATO countries. The result is the 5% that President Trump has called for, and we will follow him in that respect, said Foreign Minister Johan Wadeful. I'm sure I pronounced that wrong. Apologies, Johan, at a meeting in Ankara, according to Deutsche Welle. Germany currently spends just over 2% of GDP, but recently amended its constitution to allow for more defense expenditure. Look, a big ramp up in defense spending in Europe. This is, again, the fallout from that blow up in the Oval Office between Vance, Trump, and Zelensky. The end of the day, that means Europe is going to be building a lot of weapons here. I think this is probably not going to affect American defense companies that much. There may be some things that the Europeans buy from the States, missiles, aircraft, but they're probably going to be buying predominantly European weapons here. So that's why the European stocks are particularly ripping here. And another one I want to do here, I want to send a shout out to my buddy Nashville Pasta Man, who kind of hinted at this a couple of days ago. And once again, Pasta, you got this one right. Bridgestone eyes price hikes and more U.S. output to counter tariffs. All right, so we got some more manufacturing happening in the United States here, but it's going to be more expensive, as everybody knows. Bridgestone is expanding production in the Americas and considering raising prices to offset the impact from tariffs. The Japanese tire maker aims to increase U.S. passenger tire output by nearly 2 million units by the end of 2027. According to an earnings presentation, Bridgestone will also make a small investment in its Aiken, South Carolina plant to enhance productivity. Price hikes are also on the table to counter impact from U.S. tariffs, CEO, something I can't pronounce, said in an earnings call on Thursday. So some more tires going to be made in the USA because tariffs, but they're going to be more expensive. So maybe some more jobs in the States, but higher prices at the mechanic. Yay, tariffs, I guess, I think, I hope, I don't know. And I just want to say thank you very much to, oh, look, speak of the devil, there's the Pasta Man. UHC is the stripper you dated during your bad boy phase. I didn't know you during my bad boy phase, Pasta Man, but there was a phase. And it's funny you should mention that. I think I'm going to stop there. It's a family show. But yeah, United Healthcare, guys, that's the company you might want to get checked after getting too close to that company. That stock is just dead money here. There were people on CNBC saying, oh, United Health looks very attractive at these valuations. The CEO just abruptly resigned without explanation. You could have known that this probe was coming, this criminal charge. And again, I don't know what's going to come out of this. I think there's going to be a lot of stupid posturing by politicians. Everybody's going to try to take their pre-existing political dispositions towards healthcare, and somebody's going to be like, you see, this is why we need Medicare for all, because Medicare Advantage is so fraudulent. So we need Medicare fraud for all. And I am once again asking for your support. Gee, who do you think that might be? And then, of course, on the Republican side, you're going to be like, oh, you see, this is why we need to turn over more control of the healthcare system to these insurance companies that are already committing fraud on a wholesale level. They both suck. They're both wrong. In my opinion, we need to get insurance just completely, entirely out of the equation. All right. For years, we had doctors in this country without insurance companies, and somehow we all managed to go to the doctor when we got sick and get taken care of. Maybe we just go back to doing it that way. All right. Wouldn't it be nice if when there's a thing bothering you, like your knee, and you say, hey, doc, it hurts when I do this. The first question out of the doctor's mouth has something to do with your knee, something to do with your behavior or your health, and nothing to do with, well, before I determine your course of action and treatment plan, tell me what kind of insurance you have. I don't know. Maybe we just get the middleman out of the whole equation. I don't know. I just throw them out there. You guys do what you want with them. Thank you, Pasta Man, for supporting the channel. And Pasta Man again saying, come on, Jack, you remember how the Germans get when they run low on energy and minerals. Military spending up, morning military melons. You know, here's one thing I got to wonder about this 5% of GDP target. How much you want to bet? At some point, some green muckety-muck in Germany is going to say, well, solar panels is technically defense spending because if we build solar panels, we won't need Russian natural gas anymore. And therefore, it's kind of just like building tanks and just like building missiles. Mark my words, some clown in the whatever you call the Bundesblatt, whatever they call their governing body, is going to stand up and try to argue how windmills and solar panels counts as defense spending. Guarantee you that's going to happen. So, yeah, I know how they get when they're low on energy and minerals, and, well, they be getting low on energy and minerals. Thanks again, Pasta Man, for everything you do for the channel. Also, thank you for that tip you sent me yesterday about the real estate and the property taxes. May have more to say about that in the days ahead. And wellness through muscle, my man Wes. What's going on, Wes? Another new name today. He says, so since the market makers won't do it, how do we, the people, pop this bubble or at least hamper the liquidity being used to inflate it? Look, if I could figure that out, I'd tell you, Wes. All I could tell you is I opted out largely of this asset bubble in middle of 2022. I sold most of my stocks and I bought a lot of gold, silver, and Bitcoin. And although stocks have rallied tremendously during that time, gold, silver, and Bitcoin have also rallied tremendously during that time. So my risk-adjusted profile has looked just fine during that time. That was how I handled this bubble. When I see a market whose sole purpose, whose sole focus is the avoidance of price discovery, that is a market I don't want any part of. And so I remain largely out of it. When I see price discovery, when I see those losses finally booked that they've all been hiding, then I'll go shopping. I'll take that cash and I'll say, yeah, you know what? This looks cheap here. This looks like a good valuation here. I think this asset class is fairly valued, so I'm going to buy some. But I don't see that happening now. So, I mean, as far as how do we pop this bubble, just deny it access to your cash. I mean, that's the only way I can say it. I mean, people keep just passively pumping their money into this market. It's all going into the same thing. It's all just one big crowded Mag 7 trade. And everybody's going to want out at the same time. When that happens, I don't know. I'd be a much wealthier man if I could tell you when that's going to happen. But I can tell you it will happen. Thank you very much, Wes, for supporting the channel. And thank you, everybody, for having your coffee with the Melon Heads this morning. Thank you guys for the generosity in the super chats, as well as you, my magnanimous Melon Heads on YouTube and Patreon. You guys are the best. Thank you so much for everything you do for the channel. Don't forget that like button and that subscribe button on the way out. If you're new here, hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.